All right, traders, this is Blake Morrow, and you are listening to the daily Roundup webinar. I hope everybody's having a great and exciting trading session. It is really, really wild out there. Obviously, the crude market is what's really on the move, and it spurred a lot of activity in equities. But notice, I want to show you guys where crude stops, just so you guys know the level that's super important. Whoops, this is 2750, right? Today's high was 2716, right? Or 2750. I've been noting for let's see, where is the crude oil? Sorry, I just had to eat some food. From yesterday, the divergence in the RSI may allow for a near-term bounce in crude. Resistance will be any move close to the 2750 level. Well, that's what we hit today. And there's obviously some confusion about output and, what Trump has been talking to Russia and Saudi about, about their output levels and where they're going to be. The fact of the matter is that we've come up to really key resistance. And I think that you have to just be really careful. If you happen to be long the crude market into this news, you just, obviously right where we're at is is a dangerous place, right? If you think that crude's eventually going to break out, then what I would say is I would find some sort of dip to buy into, maybe something like this. And I'm not trading crude, so I'm just kind of giving you guys a little bit of maybe some guidance here. Maybe a dip down to 23 bucks. Maybe a dip down to a little bit lower to 22 to the 618. Because this is a breakout point. You might be able to, if you're lucky, be able to get a $22 move. And then if you want to play it on the long side, that's what I would do if I was going to play crude. Either that or you play it on a breakout above 2750, knowing that, or above today's highs, knowing that you're probably going to get a nice little run to 30 or something from there. But that's crude, and that's obviously spurred a lot of movement in the S&P too. The S&P's not too far off of its highs. Very messy market today. Some of the guys that I work with were talking about there's probably some residual pension fund buying that has taken the market a little bit higher despite the weak economic data. But the weak economic data, you have to realize that longer term is going to weigh on equities. We may be up right now, but by the end of the day, we might be back to flat or maybe even down. I still expect that as long as this 2650 level is holding in the S&P, there's really, it's to be long. Other than maybe a day trade, is scary business at these levels. You know what I mean? Because you are below a key level of resistance. Now, what I found really interesting as well, one of the guys that I work with in the New York area, he talks to currency traders all the time because all of his buddies are, they're all currency traders on different desks and for different firms and, whatnot, that he's known for 20 years. And he's like, all the FX guys that I know are all trading the S&P currently. And no one's trading FX because the FX market, when I say FX, no one's trading like dollar denominated currencies because no one knows what to do with the dollar right now. I've been giving you guys that the spiel over the last few days, like, hey, I'm not really too sure what to do with the dollar. I can argue that the dollar should go up, and I can argue that the dollar should go down. So that's why I've been really focusing more of my attention on some of these cross rates. As you guys, many of you know that are in the chat rooms that are, obviously users of ForexAnalytix, I've been picking up some euro pound down here, and my average is a little higher than where we're at. It's in the 70s, but it's basically right here. But triple confluence of support here, quadruple. You got the 200-day moving average. You got previous breakout points. You have the wedge support. But before I get aggressive in the euro pound on the long side, what I want to see is I want to see a break above this level, which would be 88, basically 88 pence. All right, that's what I'm thinking. I have been buying the Euro Aussie on dips. I, bought overnight dips, sold, not at the highs, but I sold, above 80. Then, I'm trying to pick some up down here, and I'm trading around the markets. That may not be the most exciting way to trade right now, but I'm missing out on a lot of the crazy volatility. You look at like the squeeze in the dollar yen. This is post data, and I know the equity market screamed up a little bit. This is a short squeeze. That means everybody was leaning on the yen, in my opinion. Does that mean that the yen's done going higher? No, or the dollar yen's done going higher? No, I think the risk right now is that we made a false breakdown. We might actually squeeze to like 109 again. I think this is actually a risk now. And I'd be a happy seller up at 109 if I could see it, but I think that's quite possible. Now you might be asking me, does that mean that stocks are going to go higher? It could, but at the same time, when you talk about, the S&P and the dollar, the dollar could just be in demand even as stocks are going down, because that we've seen that already over the last few weeks. So I'm not going to hang my hat on the idea that, because the dollar yen's going up to 109 and a quarter, or I think it's going up there, that means that the S&P's got to go back to 2,600. I'm not in that camp. But the S&P, I have to say, is pretty well bid. But man, the data that came out today, the weekly unemployment claims at 6 million, it's hard for me to buy into, strength. Maybe if it dipped down to some support, maybe down at 2,400, I'd be more of a likely buyer of risk. But while it's up here, we could very easily just drift lower by the end of the day and be trading back down at lows. So that's kind of how I'm looking at the S&P. As far as any other currencies go, I have to point out that the cable's starting to trade a little heavier here. The euro is definitely heavy. We broke through this support, and what's really interesting, and I still have a live order. I do not. I must have canceled it. Thought I had a live order. I did at one point. I had an order to buy the euro when it was here at 108.30. If it got to 108.30, and then I canceled it after everything spiked up. What I did end up doing is getting short the Aussie dollar at 60.60. I told everybody in the chat room I'm gonna sell it here, and I actually was making breakfast and away from my desk, and we spiked right up into resistance. It tripped my order, and then I got out for a quick like 12 pips or something. And I'm kind of sidelined at the moment, but because of the volatility that hit the market after those oil headlines, I just kind of decided I wanted to leave it alone for now. And same with the euro dollar. But I do think that the euro could find some support down here. This is a big 618 retracement. I know, we broke out of what was looking like a wedge, but at the same time, this could end up being just a channel, right? More of a pennant. So, I think the euro should find some support down here at these levels. If you guys are listening in because you are users of ForexAnalytix, make sure, if you can, join us in the chat room. It's right here at the very top here, this link, because that's where I'm at most of the day, chatting with everybody else that's in there. There's probably like 100 of us in there chatting around, talking about the markets. For those of you that are listening to this and you are not a ForexAnalytix subscriber because you listened to this, an hour or two after I did this live, because you're not a member, well, try out ForexAnalytix. Make sure you do so. It's only $1 for 10 days. Try it out, and then this way you can listen to this webinar live, but B, you can be with us in the chat rooms, and then C, you can actually have our platform, whether it's on mobile device or on the on your just on your desktop. So guys, thanks for tuning in today. I hope you have a wonderful day. I'll see you guys back in the chat room here in a few minutes.